With you?
I don't know.
What is the problem?
Once again,
You sound like Michael Scott.
right? Hi guys, welcome to the Unpopular Opinion. I'm Kemi.
Claire.
Prim.
And we're real.
Raw.
And
we're
we're
saying it all.
This week's episode of the Unpopular Opinion was shot at Protea Skies Hotel. This is an extension of that episode which we did on the economy. What did we call it? And we're talking about how the economy is eating us.
Y'all can afford being alive, like,
and using Ubers. So I'm going to hand over to Prim because today she's the one taking us through.
We're going to open this by asking about the price of onions.
Good.
Kachumbari is now.
You can't have kachumbari.
We have a ratio of tomatoes, like say 3 tomatoes, obviously in a wealthy home, with a quarter of an onion. You remember how we used to say we like onions? Do we like them anymore? Was it a like or was it luxury?
It was luxury.
You did genuinely like onions?
Too
No, we don't. We now just
expensive.
you go to your neighbor's house, smell an onion, come back home and cook your food without one. And today we want to ensure that there is no future like that where at least you cannot afford one onion.
Good.
And we want to talk about financial protection, protecting your future. And we don't mean that, oh, buy a Maltese, buy a bulldog, put it at your gate and protect your finances. Do not be like those people who keep money in the ceilings. That's not what we're talking about. We're not talking about under the mattress when we say financial protection. We're talking about protecting your future, securing your future.
Building wealth.
Yeah, making sure that, there's, when you kaput.
Trust Prim to make
There's
them money.
When you kaput, unfortunately, as we shall all dust cometh from, there's something for you, there's something left in the bank for your siblings, for your children. When I say siblings, people are like, why are we giving money to our siblings? But yeah, African tax and black tax is alive and well. So as you need to be taxed even in your death, as you should be paying black tax as you die. How will you be paying that black tax?
When you don't
How
have
will you
money.
protect it? How will you protect it? And we have Tony over here from Prudential to come and talk to us about financial protection. But please first say something about yourself.
Thank you so much. It's an honor to be here with you. And I'm looking forward to sharing with the audience on what we can do in terms of holistic financial planning.
By holistic, do you mean like, are we going to have like yoga mat seated here and then you do?
And then we meditate.
And we meditate. You meditate money. Are we manifesting money?
Now, basically what we're going to be able to take through your viewers is what they need to do throughout the different stages of their lives, what they need to plan for, what they need to worry about, and maybe if you worry about something, then you can plan for it.
What we should have done in a long time ago for us to be able to afford onions today.
Good. So all of you who are with us in this non-affordance of onions, this is for us. I want us to I want these things to be of like, you explain to us like we are 3 years old. So now, insurance, which to most of us is a myth. Ugandans, let's be real, most of us, the quote-unquote middle class, it's just vibes. We are on vibes. I don't even know if we're an actual middle class. I think it's like imaginary.
Our insurance is more of car wash.
We are one health crisis away from poverty.
Complete poverty.
All of us. Even the rich people in Uganda.
Yeah, even.
So
please,
as we are sitting here without any, I have never had insurance on anything in my life. Maybe this third party.
Which they ain't even one. You're just giving the government money for nothing.
Outside of third party. Why should I have insurance? And what is insurance even actually? Like, just what is it?
Okay. Well, I'm hoping that by the end of this, I should be able to break it down not only for you ladies, but also for your audience in terms of what is life insurance and maybe what are the different types of insurance. I think for us to be able to understand the element of insurance, we need to understand certain elements, okay? And that's what I'm going to be able to break down. So in insurance, there are only 2 types of insurance. There's general insurance, and then there's life insurance. General insurance, that's where you hear people talking about the cars, the property, the different elements. Okay? Life insurance is where we talk about 5 elements. what are those 5 elements? We talk about things like critical illness. Today,
Get your pens and books.
I thought of wind, earth, fire, like
The elements of the earth.
Elements of
and I
the
want to
earth.
be able to differentiate the two, because
Okay.
one of the misconception, and I'm glad that actually on the unpopular opinion, because in this market, insurance has been reduced to small things, to things like planning for children's education, or as an emergency option anyway.
yeah.
But yet, when we look at financial planning, it is the bedrock of very many things that I'll be able to share today. So with taking you back to the different types of insurance, the general insurance works in a way that I take out protection, and I'll use an example, maybe a car. I'll probably pay 2 million shillings for a year. In case anything happens to my car, the insurance company settles for that during the year. So if the year ends and there's nothing that has happened, the insurance company walks away, I also walk away and take out a new plan. That's general insurance. Now, on the balance sheet, actually, it's more or less like a liability. It protects you if the risk does happen, all right? Now, that's the general insurance, and applies for home, car, properties,
Valuables, yeah.
everything that you can actually wish to put value, or something that you think you may be able to lose something. Now, those are items. Now, when we talk about life insurance, we talk about the person. Now, maybe let me give you some statistics. 98% of families cannot make it out to the next year if the breadwinner is not there.
Sounds about right.
All right?
Sounds about right.
Sobering.
Like there's like a border accident and the guys like, and they're like, you have a family and
Then you just know, see how.
people have to settle.
By the way, it's not only
Like
for,
it is the entire families.
it's not actually the low earners. It
It's
is
even
worse
us.
in the high net worth market.
Yeah.
It's worse in the middle class that you're talking about.
You can't afford to go for annual leave. You know those 20 days of annual leave.
Yes,
Have I taken them?
you have it taken. You have to keep working. And now, what actually happens when you when we talk about life insurance, we talk about critical illness. Today, one of the most expensive things, and continues to become very expensive,
It's medical.
is critical illness.
Yeah.
And under critical illness, there are things like
Cancer.
strokes,
Cancer,
Cancer.
heart.
many other things, right? And do you need any history in your family to be diagnosed with critical illness?
No.
You don't, because of our different lifestyles.
Yeah.
The second thing is terminal illness. Those two are different. Okay? And by the way, the average treatment is upwards of $100,000, depending on the one you want to actually get,
Yeah.
to anywhere above $500,000, which, depending on where you're wishing to get the treatment. Critical illness, terminal illness, permanent disability. Permanent disability is whereby you're not able to earn. You lose your ability to earn. Like you ladies, today you woke up, came here, you do your show, and you know the next episode will come out. Now, what happens when you're not able to actually do what you do to be able to earn? That's permanent disability. And it varies from one person to another. There are three, right? The fourth is long-term care. It's not yet here, but in the markets where we actually do support and offer some of the services, it's there. It's actually one of the, with different technology today, people are going to live longer than they've actually been living.
Yeah, that's actually, it's partly good and also partly sad, because I'm going to live long eating what? When
You
I
have no
hear that
teeth.
the life expectancy has increased, I'm like 2 food days, so we're not going home anytime soon.
All right. Now, when we talk about long-term care, it's not only for us. Long-term care in a bigger context is where you lose 4 or 5 of the key abilities you do every day. Things like taking yourself to a washroom, things like taking yourself to, dressing up yourself, bathing yourself.
Yeah.
There are about 5 key elements of
Feeding yourself.
feeding
yes.
yourself, all right? Now, these things don't only happen at an old age.
Yeah.
Now, some families have children that are not able to help themselves.
Most.
You know, that
Most.
they're born like that, right?
Yeah.
So when we're looking at all those elements are looked at in life insurance. And lastly is medical. Okay, so which is medical insurance. Now, medical insurance actually goes to the general side because it, depending on how it is structured, because some of these products can actually have some benefit of medical. So there are two, just to give you a recap and give the audience a recap: the general insurance and life insurance.
Yeah.
What I'm going to cover today is mainly
Life.
about life insurance
Okay.
and why it's very, very important. Now, when I talk about the 5 elements, you've all been thinking about yourselves, right? But now can we stretch a bit in terms of our family members, people who depend on us, our parents, because each and every one of us will actually be able to go through those different 5 areas that I've shared in life insurance. I mean, and of course death, which the ratio is 1 to 1. All right, it's a matter of when. Today, it's not about the age.
Which is a cheaper insurance, to be sure, to tell you that.
All right, and it's very absurd because we've not taken life insurance so seriously.
We don't understand it.
Yes, in sub-Saharan Africa, not only in
Can
Uganda.
you imagine? I have it, but I didn't know.
Okay.
I didn't know that it's what I even had. Like, that's how much we don't know.
Yeah.
Yes.
But also, Tony, before we even go any further, most Ugandans, including myself, have previously thought that life insurance is a scam here in Uganda.
Yes.
We've seen so many people coming up on Twitter, people we know coming to us and saying they used to pay and then something happened.
Yes.
So I feel like before you get through that,
Yes.
people won't listen to the rest of what you're going to say.
Absolutely.
So let's get through that.
Yes.
What assurance
Yes.
do we get? Because I've personally had a number of people who have who have told me that people I know,
Yes.
that they paid for insurance in the past,
Yes.
and they got to get it out.
Yes.
I don't know the details.
The details,
They got to get it out, and where they missed one, but they paid it eventually, but then they didn't get their money back.
Yes.
So that's the gist of what most of us know.
Yes.
So please take us to what assurance do I have if I take out a life insurance policy that I will get my money?
Okay. Now, for me to be able to actually go there, I'm going to explain what life insurance is.
Yeah.
Life insurance is where you go into contract with an insurance company. All right. I'll use my example. All right. I'll say, fine. I want to take, for example, my monthly spend is about 5 million shillings, right, for my entire family per month. Okay. And I know that I'm the breadwinner for my household. So I want to take out life insurance in a sense that should anything happen, I mean, we drive, we walk, we do all these things, my family is able to be given a certain lump sum to buy them some time as they figure things out. Sometimes to buy them some time, not to liquidate any of my assets, because no one ever benefits from liquidation.
Yeah.
Okay. Now, so what do I do? So I'll say, fine, I'll get 5 million shillings, multiply it by 12, which is 60 million shillings, and say, okay, fine, what would be a good hedge for them? Maybe let's say 2 years, all right? So
Times 2.
Times 2, which is 120 million.
Yeah.
So I say, fine, I go to an insurance company, and I say, I want to take out a plan that in the event I'm critically ill, you pay 120 million shillings to my family. In case I'm permanently disabled, you pay 120 million shillings to my family. In case I'm terminally diagnosed, you pay 120 million shillings to my family. Maybe part of it can actually help me get some treatment, right? And in case, God forbid, I'm not there, my family is given 120 million shillings, right? So the insurance company will say, great. How healthy are you? Because many times we fail to understand that life insurance is something you go and purchase. Your health is very, very critical. And the amount of money you want to be paid out is critical. If you remember, I've told you that I'll base on my lifestyle how much money I'm spending. So I can only hedge it on 2 things, my lifestyle
And your health.
or my income.
Or your income, okay.
2 elements, my lifestyle or my income. Preferably for the people who are starting out, it would be recommended you start with your income. Now, so when I tell the life insurance company, I tell them I want to pay, what amount of money am I going to pay to get this benefit? So they work out an option for me, all right? And they tell me, Tony, if you take out this plan, you pay your monthly premium, or it could be actually monthly, quarterly, biannual or annual, all right? For as long as you pay this premium, should anything happen to you, remember that's something we don't know when it's going to happen. It could happen a few months from now, it could happen a year from now, it could happen 5 or 10 years from now. We don't know. The insurance company doesn't know, I don't know as well, right? So basing on that concept, the insurance company says, fine, you're healthy. Of course, I'll do my medicals because the insurance company also is a business. It has to make sure that they're taking the risk in a genuine way.
Yes.
You can't
They're not
wait
giving
when-
someone who's prone to a stroke.
Absolutely,
Yeah.
absolutely. So they do their own checks
Yeah.
and then confirm to you, fine, we've accepted this risk. From the time you pay your first premium, okay, so you can design those plans depending on the financial advisor you have, all right? And we do this as well for a number of our clients. In case you ladies are interested, we'll be able to share with you a concept before we leave here.
Okay.
Now, for as long as you pay your first premium, the contract between you and the insurance company is valid. For as long as you continue the period of time until the end of the tenure, depending on how you've structured the plan. Some plans could be 5, 10, 15, 20 years. Some plans actually whole life, depending on how your financial planner advises you on how to structure them. Now, the longer the years, sometimes the more affordable the premium. Now,
Hold on. So, are you saying that if, for example, I'm paying 5 million per month,
yes,
and I die in 1 month,
yes,
still my family will get the 120?
absolutely. It is the only instrument.
They get half, I think. I don't, anyway.
Depending on how you
explain,
structure and depending on the number of the plans that you've come up with. Prudential has very good plans. That's why we work with them. So
They
some
do.
of those plans allow you to get actually the sum assured, depending on how you structured your plan. So for as long as you pay your monthly premium, remember the 5 million is not actually a monthly premium you're paying. The 5 million was helping us to know the total figure, which we want as a sum assured, which then we shall work backwards. Now, in this case, they'll say, for you to be able to do that, you're going to take out a 10-year plan, and you'll be paying 500,000 per month. So for as long as you pay that monthly premium, by month 3, if the risk happens, the contract enables Prudential to pay you.
Yeah.
Okay.
All right? Now, if you do the entire term, at the end of the term, and there's no risk that has happened, all right? You still get your premiums, more or less the money, the total, the maturity value, which in most cases, when you look into details, you find that pretty much how much money you've been paying through the plan plus an accrued bonus. That's what we call
interest, I think.
Yes.
Yeah.
But we have to differentiate them.
So
because we
if you
want to be
don't
the bank.
die, you get less money, right?
Absolutely no. You actually get more money.
Get more.
Interesting.
You actually get more money. You can, depending on the plans that you. So when you take out life insurance, there are 3 things to take care about: the company you're using, who is structuring for you the plan is very, very important, and the types of products you've chosen.
Wait, is the company not the one structuring the plan?
No,
Financial
insurance broker,
advisor.
I think.
Yes, a financial advisor, an insurance agent, depending on who you wish.
I feel financial advisors are better because they are trained for these things. Question.
Yes.
I have taken out the 120. That's my insurance policy, and this is for 2 years.
Yes.
In through 1.5 down the road, I've been paying. I don't pay 1 month.
Yes.
Something has happened, COVID, let's say.
Yes.
I don't pay 1 month, 2 months, 3 months. I have no income at that time. But then something happens to me.
Yes.
I've been paying for the last
Yes.
1.5 months,
Yes.
1.5 years.
Yes.
But now something has happened to me. I haven't paid for the last 2 months.
Yes.
What happens?
All right. In most cases, and for Prudential's case, for as long as you're not paid premium for 2 months and you've been paying your premium, you're still undercover.
For 2 months.
For 2 months.
Okay.
After 2 months, all right, the plan is still available for you to catch up, but you're off cover.
Okay.
It's very important for you to know. For as long as you're in the window of 2 months, you're still undercover.
Okay.
Now, to take you back, and maybe to clarify before I finish the explanation on the 2 elements, right? At maturity, you get the total, you get a figure which chances are it is higher than the premiums you've been paying, all right, plus an accrued bonus. We don't want to call it interest. Why? Because you need, with insurance, there's something called interest. We want to differentiate between a banking sector and the insurance.
Okay.
Now, why do people have challenges? I think that's a question you're asking. And sometimes people are not honest enough to come out and say the fact. Many times, many clients have told me, Tony, I need you to come and look at what is happening. I'm not getting my pay, or probably my policy is elapsed. In actual sense, this person has not met their part of the bargain. You find that they paid their premiums, let's say for a year, and let out maybe 2-3 years, and they haven't been paying their premiums. At that point in time, the plan has elapsed. So if you, depending on the insurance company, I know Prudential is quite lenient. They'll probably tell you, okay, fine, catch up with your plan so that it's activated.
Yeah.
In other markets, by the way, after 3-4 months, like the US market, after 3-4 months of missing your premium, it elapses. That's it. But today here, with Prudential, you have an opportunity to catch up. Now, many people do not come out to say the fact. They don't come to say that, I did not pay my premiums.
But also institutions are not coming out to clarify this, because that has ever happened to me.
Yes.
But I didn't know that they were going to tell me, oh, it has elapsed. Nothing. You understand? I didn't even know from the very beginning.
Yes.
I didn't know that there were consequences
Yes.
to me not paying.
Yes.
Does that make sense? And for me, I was there, like, because they're supposed to deduct the money before,
Yes.
as when it hits the account on the 10th, for example. But I was taking the money out, thinking, I'll refund it.
Yes.
I'll refund it, right?
Yes.
But I didn't know that I'm losing out on so much more. So
Yes.
the agents
Yes.
need to explain these things to people.
Yes.
Yes. So even when like Prudential comes to you, need to break it down to people the same way you're doing it here on the show.
Yeah.
And I'm very sure that so many of our viewers are going to be like,
We
what?
didn't know.
I am on. Yes, I do
Like, I have
life
a
insurance with
I have
but I didn't know
Prudential.
that there are consequences to me missing my payments.
Yes. I agree.
It's-
There's been a gap.
Yeah.
And I'm glad that Prudential is doing something.
I think Prudential is doing a very good
doing
job.
quite a lot
Yeah.
in terms of sensitization. Because this market, almost 80% of people who have policies do not know how those policies work.
That's true.
Yes.
That's very true.
Yes.
Yes, there's a gap maybe on the agents as well, who are probably not able to communicate what this plan should actually do. But also there's a problem from the customers.
True.
The customers do not allow the agents or the advisors to give them the reason they should be taking out these plans. Because insurance in this market has been reduced to education plans.
Yes.
Yet from our point of view as financial planners, we use it for succession planning, we use it for business exit strategies, we use it for very many options. We use it in estates. Life insurance does so much. And by the way, in terms of financial planning, it is the only asset that does what it does. And to give you a proper view, when we're doing holistic financial planning and what are families, what we call the wealthy families, why are they able to pass on generational wealth? Because when you look at their investment portfolio, they have a lot of holding in life insurance. And they follow a process which is CSI. The CSI is coverage.
CSI Miami, New York.
No, CSI is an acronym that we use in financial planning. So we look at C, which is coverage, that covers the 5 things I talked about. That's where really life insurance is fully exhausted. Then there's savings and investment. I don't want to spend so much time on savings and investment because I'm sure you've heard so much about that. Now, majority of our community
Don't have coverage.
have talked about savings and investments.
Yes.
And many times, why we see families that would not, when you're growing up, you see families that were wealthy, right?
Yeah.
And sometimes they didn't do anything wrong. Sometimes they only missed out one thing, which is coverage. So they've done their savings very well. They've taken out their investments quite
Very well.
But guess what?
No
the
coverage.
key person has no coverage. So if they're diagnosed with critical illness, what happens? They have to go and sell their investments to be able to take care of this person because they left out the C.
So like just like from a point of wanting to enter the thing when you're knowledgeable,
Yes.
are you saying that it's advisable
Yes.
to first talk to a financial advisor before you take out an insurance policy?
I think for the audience watching and the audience and yourselves, one thing that you need to always look out for is why am I actually taking out this life insurance? On what basis? Am I taking out a plan for education planning for my children? Am I taking out a cover? And you can do an honest analysis. In my portfolio today, because I'm sure you all have portfolios, my bit of saving, my bit of investment, you're the biggest asset in there. So what kind of protection do you have that can turn into tangible cash value
Even if you're not there.
if you're not there, that can at least buy these people sometimes? All sometimes we need to do is buy these people time. That's it. So I would say that some agents, I've engaged with some of the agents in this market, quite well knowledgeable. Yes, a financial advisor is very, very important. Why is he very important? He only doesn't look at only the insurance part. He looks at the
The
holistic
whole-
financial
What
yeah.
is
plan.
it giving
I
you?
think-
What
Yeah,
is
absolutely.
it giving to you? My client is my biggest asset.
Yeah.
What does it do for you?
Absolutely. Now, when we look at financial planning, there are 7 spheres. You know, we talk about finance quite a lot because it's our bread and butter. It's what fuels all the other 7 spheres. But under there is family. It's as deep as finance. We were doing financial planning. Okay. There is work, because work is very, very important as well. There is education. There's community. There's spirituality. You know, all those spheres are as important as the financial element.
Okay.
Now, insurance is the only asset, and I need to emphasize this to the viewers, it's the only asset that does what it does. In my entire experience as a financial advisor, there is no instrument that you can pick up, that you pay a monthly premium and guarantees you a sum assured should those things that you don't know when they are going to happen.
Even rentals.
They don't, because the rental will actually pay you
Rentals, by
monthly.
the way, are tricks.
I know.
Rentals
So
are the biggest
I'm
scam.
asking for my friends and for myself who have invested in rentals of now, okay.
Yes.
When you get the money from rentals, now you can decide and be like, let me take out a policy.
Actually,
It will pay you back.
in financial planning, we say there's no complete financial plan without life insurance.
Okay.
Is it advisable to have just life insurance? So if you have like life insurance,
Yes.
and you have the different savings within the
Yes.
policies of the life insurance, then is it something you'd say, okay, for me, I don't have enough money to move around, let's say in building rentals, and then I also have land, and then I also have this.
Yes.
Would you say I am fully covered if I say, okay, now every single thing I make, any extra money I have is going into life insurance? Would you say I am covered?
I can say that, when we're looking at holistic financial planning, you do not want to hinge everything
In one basket.
in one basket, right? And by the way, life insurance, the earlier you take out, the more valuable, all right? Some cover is better than no cover. As we sit here today, if you don't have any cover, you can actually get some cover. Sometimes, the coverage I need is 120 million, right? But today I don't have the money to actually take that cover. But as
get
opposed to being
something
exposed,
smaller.
right? I can actually take out something. And as financial advisors, what we do every year is to keep re-emphasizing to you that this is how much coverage you actually need, right? But how are you doing? What are we putting in place to make sure that we catch up? So to answer your question, you cannot have everything into life insurance. But at a later stage, when you're doing the different cycle of life, and what's the cycle of life? We all move, we are born, we go into our 20s, we go all the way till we retire, till God, you say,
different
kaput.
seasons. Kaput.
All right, till we are able to get out of this world. Now, as we're making that journey, there are 3 different stages. There's an accumulation stage. Now, in Uganda's context, we start working at about 25 years old, right? That's when we get our first job. So as we get our first job, we have some kind of income. So at that point in time, it's so unfortunate that in our schools, and even between us here on this show, no one ever taught us on what investment to make first.
No.
No one. We tried to figure things on our own. Maybe you have a friend who says,
We just fell into the world and someone is like, let's buy land. Okay.
Let's build apartments. Okay.
In actual sense, if this is taught in school, the first single asset someone should be able to take out is actual life insurance. Because when you leave school, the most important asset you have, you don't have the land. If you're not privileged to have inherited all these things, I want to assume to a normal person, right? You started out, done school, gotten your first job. So who's the most important asset in this case? It's you. Because without you going to work, you can't actually.
So you have to insure yourself.
That 1 or 2 million shillings, right?
Yeah.
So as opposed to you getting that money and saving it, all right? You take out a life insurance plan, right? Which is more or less like a saving plan, all right? But actually gives you benefits.
Better, yes.
Because today you have your money in the bank,
Yes.
all right? If anything happens to you, what happens? The best your family can get is the money that you have in the bank, all right? After a different process of administration and so much.
If you never get back, what you put in the bank is never what you get back. You always get back much less.
If you had the same saving in a life insurance plan, all right? You don't need any administration from the time you're not there, or you're permanently disabled, or you're diagnosed with a critical illness. All you have to do is provide those documents, and the insurance company will pay out. Usually it takes between 5 to 7 days max. You don't have to go through different administration and so on. So as you start to work, actually that should be the first asset. If there's a way this can actually be taught in the universities, it should be the best thing, because that should be because if you can put value on things like land, your car, why wouldn't you put value to your life?
On yourself,
All right, and there you're alone. So as you're making that journey from 20, you get to meet your spouse, you have kids. Now you can notice that now you need more coverage, because it's not only about you. You have dependents. You talked about black tax. They're also somewhere in the equation. Okay. Now, as you're making through that stage between 25 to 40, it's a stage of accumulation. You can stretch it a bit, let's say 45. It's a process. It's a time for you to accumulate. Now, by the age of 45, you need to go to the second stage, which is preservation. Preservation means that I've been able to accumulate something, all right? Now, how do I protect this?
Yeah.
I need to preserve it. And as you move towards 60, I mean 55, there about 60, you go to the distribution stage. What does that mean? Being able to use that you've been able to preserve, to be able to take care of you, not only you, but also the beneficiaries. So we all make that cycle. Now, the challenge that we have why we do not have generational wealth, people jump the preservation stage. They accumulate and immediately go to distribution. Why? Because lack of information.
Yeah. Also, sometimes you guys, we accumulate late. There's also that.
That's true.
You know,
Yes.
people spend like the 30s not working.
Yeah.
That's
Then
true.
they get their first job at 39.
Yeah.
And it's like you're in a rush, a race against time.
Yeah. I also don't want to pay professional.
But now I think it brings us back to in whichever stage, even if your accumulation stage is 39, you should take out
Start.
a policy. That should be the first policy.
never
the
too
first
late.
thing you should do.
Yeah.
And the thing is, I mean, as old people, we like to, when we are sick, we go to a doctor, right?
Yeah.
When we need some legal advice, we go to the lawyer.
Yeah.
But when it comes to things like our finances, why don't we ever seek out the
Professional.
financial planners, right?
Yeah.
And have a conversation with them.
Yeah.
And I'm certain by the end of this, you will have actually got an idea of why you need certain things.
Yeah.
Yeah.
100%.
And why they are basic needs. They are not
Yeah,
a
it's not
luxury.
like
They are
And you know-
basic needs.
I feel like we are in our 30s,
Yeah.
and all this is information we've got maybe in the last, if
We've
it's a lot,
stumbled.
2 years,
We've
and we've
stumbled.
stumbled on it.
Yeah.
Bits
And
and
yes,
pieces.
we see the weight
Yes.
of starting. Now, we're not old, it's not late, but later
Yes.
in life. I see a lot of money that that I could have put into, I really, like, I made a lot of money in my 20s. I had no obligations, I had no nothing. I made a lot of money in my 20s that now I make money, but it's already being as soon as it gets in, it goes out.
going out.
And yet
Before it
then
comes in,
the rate of going out was much, much less.
Yeah.
And even if it was there, it wasn't on necessities. I did not had my basics taken care of. So if you're, and our biggest audience are young people,
Yes.
younger people below 30s. If you're young
this
and you're
information,
listening,
yeah.
get this information. Do not be like us.
Use this information.
Don't wait until you're 30 and you have a child, then you're like, Banangi, what am
And
I going to
you're
leave my
close to-
child? If you know you want a family, even if you don't,
Yeah, but it's just
covering yourself when you're in your 20s, and those are beautiful years. That's 20, when you're 20, you don't realize.
Yeah.
When your 20s are beautiful years.
Yeah.
That's when you'll never have as much money. You'll have more money, but you won't have as much room
Yeah, like
to
wiggle room.
navigate until you're much older. So
And like he
just
says,
don't
we
make the
should
same
take it back
mistakes
to the
we've
schools.
had.
We should
Yeah.
take
Yeah.
this
because
back
they're
to-
basics, huh?
Are
that
you
we don't
guys- Are you
have.
guys
Yeah.
doing that? Are you pushing this? Are you talking to schools?
I know Prudential is doing a lot.
Okay.
They need to talk to
Prudential is-
Prudential needs to talk to schools.
Yes.
Prudential needs to go to, like I was at FEMA where they do financial economics and stuff. Let there be a lecture where your lecturer says, "I'm not teaching you. We are going to really listen."
They should actually
financial
be
advisor.
because I find
Let's take this to schools
They
because we needed it.
there should actually be a curriculum in school for financial aid. Why are we still learning about the Alps in SST? And
University.
do you
If they had taken that
understand?
time of the
There's no
Canadian
more
prairies
Canadian
to be
prairies
learning
traffic
about
in
this.
New
Because
York.
you're honestly giving so much information
We-
on this. Like you've given so much information.
Yeah,
Also, like thinking about it, I'm literally going to get out of here, and I'm just like,
yeah.
where do I lie? Where do I
Yes.
stand?
Yeah. In fact, it's not too old. The thing is, if you get in touch with a financial planner, yes, you would have lost time, but you're able to come up with something.
But with
Something.
finances, you have to start.
Okay.
Just
And I feel like a financial plan, as you said, a doctor gives you a plan, a prescription to deal with whatever you're suffering from.
Follow it and-
So a financial planner, you are suffering with your finances, which most of us are at the end of the day. A financial planner just gives you that prescription that you need on how to sort out your finances so that you are sorted and insured and covered in the future. That's what I feel.
Yeah, and what's the journey like? I mean, the first thing we do is look at the gaps. We look at your portfolio
Yeah.
and look at where the gaps, all right? The gaps are things like, yes, you could actually have a plan, but how does that plan function? Does it cover all the 5 elements? Does it cover death and permanent disability?
Yeah.
What gaps are there? And then we recommend. I've had a number of my clients come and say,
Common story.
I want to pay 200,000 or 300,000 in a plan. I say, no, I cannot do that. I need to look at your plan and know what you need. once we are done with that, then it's okay for you to say, fine, you still want to keep paying what you want to pay. But I need
But
to
you first need to know the diagnosis.
Absolutely. I
Yes.
need to make sure that you know this.
Yeah.
Second thing is, how often do you look at your plans? You took out this plan maybe 3-4 years ago.
Is
Is
it
it still
changed?
relevant to
Yeah.
you?
For your
Yeah.
life,
Okay?
yeah.
And always make sure that you sit with at least your financial advisor or your insurance agent once a year to say, look at the plan. This is the plan I took out for this purpose. Is it still relevant today?
Okay.
Because that's one of the biggest things. I mean, people don't go back look at their plans.
So
Don't
would
look
you
at
say,
those ones. Look at me who has not gone back after 3 years. I have not yet even come and said, oh, Prudential friends, when we started.
I was here, now I'm here.
so would you
Because
say
many
like,
things change. Yeah, please go
I was,
ahead.
I was just thinking, what's the first step? Like literally, I'm there, I'm earning, I do not have a plan.
Yes.
Where do I, like, what's step
Apart
one?
from
Okay.
Friday plan.
The first step is to have a conversation with a professional, which is
Okay.
ourselves, all right? If that's you, we are happy to even have this conversation after this.
It's me. I'm the one.
100%.
I am
Me
she.
too.
It's me.
All right. Okay. And then we look at exactly what we call your financial, or what you call your investment portfolio. It's quick. We'll run through it, and I'll be able to show you where the gaps are. And then we'll say, fine, do you agree with this? It has to make sense to you.
Yeah.
If you agree with that, say, fine, what you're going to do right now, let's create plan A, B, and C. Or maybe let's create plan A, depending on your income. As you continue to earn more money, we can introduce plan B. Okay, so it's that kind of conversation. And then we also agree on a strategy going forward. Now, my job is to make sure that you stick to that plan.
Does it, because now, anyway, I'm thinking about, you know, like some of us who don't earn salaries.
Yeah.
Like, is there a place for us in that?
Absolutely.
Sometimes I just feel like like the way I earn
Like
is
one
so
day
like
you-
this.
Yes.
I'm like,
Yeah.
so how does someone feel? It feels sometimes in my head like it's only people who work in organized.
Yes.
I get X million per month.
Now I can take
get
off this
million.
much every
For us,
month.
sometimes you get nothing million,
Yeah.
and then next month you get.
Yeah. There's a
Actually,
windfall.
There's a plan for it.
Is there?
Yes. You know, with the plans, you can choose to pay monthly, quarterly,
Totally.
biannually, even annually. All right?
So I think that accommodates that gig economy. You know, we are in the gig
Yes.
economy.
Yes. It does.
So
that.
when you get it in the lump sum, you just
Take
pay.
it.
You
And
take
by
it
the
away.
way,
Yeah.
Prudential has made it even more easier with an app.
You
Other
can
when
just
get
go
that
and pay.
windfall.
You
The
add.
mobile money.
You just
You
add.
just make your payment in the
just-
comfort of your home.
Oh,
Prepaid,
okay.
yeah.
One of the best things, and I think where Prudential is really leading the market. I mean, not that I work with them, but because I'm able to understand what other people are offering on the market.
Yeah.
They've invested heavily in technology. You're able to look at your statements, where many people struggle and say, I need to go, and someone has
You need to go, you
can
need to
actually
call.
download your statement right from your app.
Yeah, I'm imagining mine.
You can make your payment, you know, and every other day they keep coming up with very many interesting ideas.
And you know,
in
I
terms-
really love companies that have come to sort and solve African problems, you know, and that's what I really like. You've seen us Africans, we are gig economy.
Yeah.
We have most of us have no jobs.
Yes.
Yeah.
You know,
have
most of
lots
us have no
black tax,
jobs.
you
We
cater all
have
those things,
2
yeah.
year. We are hustling,
yeah,
you know. So I like the fact that you've made a plan. You've made plans for us,
Yeah.
for our specific economy, rather than getting plans that work elsewhere and just bring them here and expect us. Which is, I really respect that. Yeah.
So when we are, how I'm trying to understand is, so when we talk about financial protection, is it now the preservative stage that you're talking about?
Yeah, when we talk about financial protection, there are stages, you know. So for you to do generational wealth, you need to have created that and also preserved it and also be able to transfer it,
Yes.
right? So we want to give, when we look about financial protection, we are saying from the stage you start to earn, can you be able to protect that income that you're earning? Can you be able to protect
Your lifestyle.
your yes,
Sustain it.
you know, very many things. The 5 elements I talked about, not only for you but also for your family. Okay, so you cannot be able to transfer it if you have not accumulated it, you have not preserved it, and you can't transfer it. So when we talk about financial protection, we are saying with the little bit that's there. Let's start with that, because everyone needs coverage. However little. it is.
Little coverage is better than no coverage.
Little coverage is better than
No coverage.
at all. So the question you need to ask maybe your audience is, what coverage do you have?
If any.
If any. And if there's none, reach out to
Yeah.
you know, some And the funny
For
thing
you,
is,
how do we find
somehow,
you? This is a shameless plug. You tell us for us, we can locate you
Yes.
here.
At
Because
where?
honestly, I'm feeling like that's where I need to start. I
Yeah.
need to talk to a financial advisor because sometimes you just see all of these things. You're seeing insurance, la 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 la, and it's just like a big,
Yes.
I don't know, mixed up
So,
thing.
do you remember when you said you have a lot of anxiety around money?
Yeah.
And a lot of our audience actually said the same thing. They just don't know. So they don't do
Like
anything.
money overwhelms
Some of
you.
us will
Because
have
they're so
money on the account, but you're
overwhelmed.
like, let me just leave it there.
It
like,
just overwhelms me.
zeros.
yes.
Exactly.
I just
So
pick there
I
and
feel
then-
like you need to address that because a lot of people feel anxious. They see a lot of money, either they blow it through it or they're like, oh my God, what do?
Where do I
You
do?
know, there are so many options and we don't know which is the right option
Yeah.
for us. So where do we find you for you to help us?
Okay, for myself, I run a company called Aton Capital. So we are based on Acacia Mall on the 4th floor, where we are happy to engage with those that are interested.
So me, an individual, I can come.
Yes, as in we can always plan and have an appointment. But also Prudential has close to 4,000 agents in the market.
I've seen the agents. I want the financial planning.
Great.
Personally,
Yes.
but agents are great because I've got a policy through an agent.
And the
But
funny
I
thing
feel
is
like
this. Every person in their lifetime, has had a conversation with an agent. Now, when we say this conversation, we say that, yes, there may be some gaps. And I know the insurance companies are doing their best, at least Prudential are doing their best to equip their agents. And we're doing something with them as well to make sure that we...
you really
by the
are.
way,
It's
as
very
Aton Capital,
progressive.
as financial advisors, with all our clients' protection or coverage is done with Prudential. Why? Because Prudential has been around for more than 175 years. Can you imagine?
Yeah, wow.
Globally.
Probably
That gives them
one of the
leverage.
oldest
That
or one
gives
of
them
the
leverage.
oldest.
I mean, they've been around in time of Titanic. I heard about the
Wow.
they're the ones who made that compensation. Titanic.
Wow, okay.
So they've been, and they've seen very many types of.
So there's a level of trust that we can have.
Yes, and it's wholly owned by Prudential PLC, which is a listed company on the London Stock Exchange. So that gives you some kind of confidence. Because with insurance company, when I say there are 3 things to look at. Who structures it for you? Which insurance company? So in this case, if you have a financial advisor, that you need to be comfortable with that person. All right? You have the insurance company that has been around, that has the experience to do that, and are they liquid enough to do that? I can confidently tell your audience, Prudential can actually do that. We've worked with them for some time.
So they'll
We're
not
very
be telling
confident.
us things of government tena sasula.
No.
Mutira mulinze.
And let me
So
tell you,
that- economy, COVID.
Hatuna mabanja zukanzi twakava mu COVID.
and by the way, do you know that the insurance industry is one of the most protected industries? You see, for every year, for example, if Prudential has done protection for, let's say, 500 billion in the market, for next year for their license to be renewed, their mother company has to give a guarantee to the central bank. Can you imagine?
That they can pay back anything they owe.
So, yeah,
Okay.
absolutely.
Worth that or more.
Yes. Now, of course, I don't want to go into the details in terms of
Yes.
the risk vis-a-vis the bank. Okay, but I want to give you the confidence that actually you're more safe for having your money in,
In an insurance company.
Okay, so
The chances of you getting your money back are very,
so this
very
is obviously a topic that we can talk about forever because there's a lot there, but I feel like you've really given us like some basics to work with. So if, for the people who are watching, if there's like 2 things you'd leave them with of, guys, this one and this one.
Yes.
But also
Alright.
would
Those
like
be-
to have him back. Would also, people can let us know if they would like to have him back. And
I think in that
Okay.
situation,
Delve
maybe if you guys
into
have
more.
specific questions, so that we
Yeah.
don't repeat the same stuff.
Yes.
Like, we wouldn't want it to be a thing where we're giving you the same information this time, next time, all the
Yeah.
times. If there's something specific you feel like you need to hear from a financial advisor or from our friends over at Prudential, let us know, and maybe we can design something that speaks to you directly.
Yeah.
So until then,
Yes.
what are 2 things that you'd like our audience to leave with?
All right. 2 things.
Yeah.
The first thing is almost 85% or 90% of families cannot be able to make it to the next 2-3 years
when the
without the
Breadwinner.
breadwinner.
rub the chili in that wound.
Right? Now, if you're in that position, and if you happen to be the breadwinner, I recommend that first, after you watch this, go out and take out some level of protection. Some protection is better than
No
None.
protection. Yeah.
okay? And make sure at least it covers the 5 elements, or at least 3. What are those 3? Critical illness, permanent disability, and death. You may not wish to take the entire 5, and by the way, take them with Prudential because again, it's a company I'm proud to associate with and work with. The second thing is you need a financial plan. You know, if you do not know where you're going, pretty much you can never get there.
That's true.
Because if you actually get there, you won't know that actually you've gotten there.
Yeah.
And what can help you to understand that's a financial plan.
Okay, thank you. That is, those are words to live by. Me as me. I have
Even
taken
if you
them.
don't have money right now, go and see a financial advisor.
Yeah, at least to have a plan,
In my
right?
opinion. At
Because
least have
not
a
having a plan
plan.
is a very confusing place, I have to say, as a person who doesn't have a very clear plan myself. But thank you so much for joining us. We really appreciate you just like taking the time to share these basics with us. And a very big thank you to our friends over at Prudential who made this episode possible.
Yeah.
You'll definitely see more of them here and there. So a big thank you to them. And guys, please let us know again if there's stuff around finances, insurance that you want us to talk about. This is a space where we really want to take it out of a
improve
classroom
ourselves,
mode,
yeah.
but talk about it in a conversational way that hopefully you can take something with you and act that will improve your life, even if it's in the next month, the next year, and we are growing with you. By the way, let me assure you, we are learning right along with you. So until next time, guys, we will see you on the next episode
week.
of Unpopular Opinion.
Hi. Subscribe.
Thank you.